everyone, and welcome back to the Wisdom by Harry YouTube channel. My name is Harry.
And I'm Mary. We're so excited to have you here today for another fascinating episode. Today, we're jumping right into something big that's shaking the markets. Those Liberation Day tariffs announced back on April 2nd.
Right, and specifically how they're hitting the crypto world.
Exactly. We're going to look at how these trade policies, the 10% baseline, but then way higher for China and the EU, how that's playing out for Bitcoin especially.
Yeah, we've been digging through a bunch of recent analysis on this. It's a fascinating intersection.
So what's the plan? What are we hoping listeners get out of this?
Well, the idea is to cut through the noise a bit, look at the immediate market hits, think about the longer-term potential fallout for crypto, and maybe tackle that big question. Is Bitcoin really becoming a safe haven asset when things get shaky like this?
Okay, great. Let's start with that immediate hit then. Bitcoin's price definitely reacted, didn't it?
Oh, absolutely. Almost straight away. We saw it drop from, nearly $88,000 down to just over $82,000. A pretty sharp move.
And it wasn't just Bitcoin, right? The whole crypto space felt it.
Yeah, definitely. Ethereum, XRP, other major coins saw declines too. It wasn't isolated.
And what about the companies involved in crypto? Did they feel the pinch?
They did. Stocks like Strategy, Coinbase, Robinhood, they all dipped. It kind of shows this ripple effect.
So what's the thinking there? Why do tariffs hit crypto stocks and coins like that?
It really boils down to investor sentiment. The big worry is that these tariffs mean more inflation, maybe even tip things towards a recession.
Right. And that usually means tighter money, central banks raising rates or keeping them high.
Exactly. Tighter financial conditions. And when that happens, investors tend to get nervous about assets they see as higher risk. They pull back.
Which, for many, still includes crypto.
For many, yes. It fuels that risk-off feeling in the market.
Okay, let's dig into that risk-off thing a bit more. Tariffs aren't like a direct tax on Bitcoin mining or anything. So what's the actual connection? Why the nervousness?
It's about the uncertainty they create. Tariffs mess with the flow of trade. They make predicting costs harder. They raise the possibility of, trade wars.
Which nobody likes.
Nobody likes uncertainty, especially not investors. So they tend to move money away from things they see as speculative or volatile, like crypto, towards safer bets. Or just cash.
And remind us again about the scale of these specific tariffs, because they weren't minor adjustments.
No, definitely not minor. You had the 10% baseline tax on pretty much everything coming in. But then those targeted ones, a huge 34% on goods from China and 20% on stuff from the EU. Those are really significant figures.
Wow. Yeah, 34% on China, 20% on the EU. You can immediately see why that sparks fears of a trade war escalating.
Precisely. The biggest fear isn't just these tariffs, it's what comes next. Retaliation. Other countries hitting back with their own tariffs on U.S. goods.
A tit-for-tat cycle.
Exactly. And that can seriously disrupt global supply chains, cause widespread economic instability, and really put the brakes on global growth. It's a messy prospect.
And of course, the inflation angle. Higher import costs mean higher prices for consumers, eventually.
Almost inevitably, yes. Businesses importing goods or components face higher costs. They could absorb some, maybe, but a lot of that is likely going to get passed on to consumers.
So more inflationary pressure.
Right, which puts central banks in a tough spot. They might feel they need to keep monetary policy tight, keep interest rates up to fight that inflation, even if the economy is already slowing down because of the trade friction.
Which circles back to making assets like crypto less attractive compared to, say, bonds that are now paying higher yields.
Correct. And there's also that risk of just less money sloshing around, potential liquidity crunch.
How so?
Well, if investors get really risk-averse because of all this tariff uncertainty, they might just sell off assets like crypto to build up cash reserves or cover losses elsewhere. That pulls money out of the crypto market.
Okay. It's interesting to think about this historically. Have tariffs caused these kinds of market ripples before? Are there parallels we can look at?
Oh, absolutely. History gives us some really important, sometimes cautionary tales. The classic example everyone points to is the Smoot-Hawley Tariff Act in 1930.
Right, during the Depression.
Yeah. It massively hiked U.S. import duties. And the consensus is it made the Great Depression much, much worse. It triggered retaliatory tariffs globally. Global trade basically collapsed, some say by over 65%, and it definitely contributed to mass unemployment. A really stark lesson.
A lesson in unintended consequences. But it's not always negative, right? Haven't lower tariffs sometimes coincided with growth?
Yes, that's the flip side. Look at the period after World War II. The creation of GATT, The General Agreement on Tariffs and Trade aimed specifically at lowering trade barriers. And that period saw huge global economic expansion, a really strong bull market in stocks. So there seems to be a link between freer trade and general prosperity.
Okay, what about more complex situations like the Nixon shock in the 70s? How did trade fit in there?
Yeah, that was a big one. Nixon ended the dollar's direct convertibility to gold and slapped on a temporary 10% import surcharge.
Right.
The goal was to fix balance of payment problems, maybe help U.S. industry. But the long-term effects included serious inflation and a falling stock market. It really shows how tied together trade and monetary policy are.
And how protectionism can backfire with inflation. Interesting in the context of Bitcoin discussions, too.
Very much so. People often point to periods like that when arguing for assets outside traditional fiat systems.
Then, fast forward to the early 2000s, China joining the WTO in 2001. That meant lower tariffs on Chinese goods, right? What happened then?
Generally, that was seen as a boost for U.S. corporate profits because input costs went down. It also helped keep inflation pretty low for a while, which was good fuel for the S&P 500's growth back then.
But it wasn't all smooth sailing.
No, that's also when concerns about trade deficits with China and things like intellectual property theft really started to grow. Those issues kind of simmered and eventually boiled over into the more recent trade tensions.
Which brings us nicely to the 2018-2020 trade spat. What did that period teach us about tariffs and crypto specifically?
Well, we saw a lot of market turbulence in traditional assets, reacting to every announcement and counter-announcement.
I remember that volatility.
Yeah. And interestingly, with Bitcoin, we saw these short-term spikes sometimes. When uncertainty peaked, some money seemed to flow into Bitcoin, maybe as a hedge.
But it didn't stick.
Not consistently, no. Those surges were often followed by pretty sharp corrections. It highlighted Bitcoin's own volatility and showed it wasn't acting like a traditional safe haven, not reliably anyway.
Okay, so let's bring it back to today, to these new Liberation Day tariffs. We've seen the immediate negative hit. What about short-term versus long-term effects on crypto now?
Well, the short-term impact seems clear. Negativity, price drops, risk aversion. That matches the historical pattern we just discussed. More uncertainty usually means crypto takes a hit initially.
But could there be a weird, counterintuitive long-term benefit? Is that even possible?
One long-term effect could just be more the same. Sustained volatility. Policy uncertainty keeps things choppy, traders jump on news. That could just become the norm for a while.
Okay, that's one possibility. What else?
Another angle is that Bitcoin could actually become more attractive over the longer term if these tariffs really start to weaken major fiat currencies.
Ah, the inflation hedge argument again.
Exactly. Or a currency debasement hedge. If tariffs cause significant devaluation in, say, the Eurozone or other places.
Like we've seen in Argentina or Turkey sometimes.
Precisely. In countries where the local currency is unstable, people often turn to crypto as a way to preserve wealth. So if tariffs contribute to that kind of instability on a wider scale, you might see increased crypto adoption as a store of value.
That makes sense. But are there direct negative long-term impacts on the crypto industry itself from these tariffs, besides just market sentiment?
Yes, definitely for mining. A huge chunk of mining hardware, those specialized ASIC miners, the advanced chips, comes from overseas, especially China.
Right.
Tariffs on that hardware could seriously increase the cost of setting up and running mining operations. It could squeeze profit margins.
And maybe even push miners to move elsewhere?
Potentially, yeah. Miners might look for places with not just cheap energy, but also more favorable trade situations for importing their gear.
Let's circle back to that safe haven question. It feels central here. Given how Bitcoin reacted, is it really acting like digital gold when things get tough economically?
That's still the $1 million or maybe $80,000 question right now. The evidence is still pretty mixed.
Because it often drops with stocks during these events.
Historically, yes. We've often seen Bitcoin correlate with stocks during tariff-induced stress or other economic shocks. It falls when the stock market falls. That behavior definitely challenges the idea of it being a reliable safe haven like gold, which often goes up when investors are scared.
Although, you mentioned earlier, sometimes we see Bitcoin and gold move together more closely. Is that changing?
That's a really interesting point. We have seen periods where the correlation between Bitcoin and gold increases. It suggests that maybe, just maybe, more investors are starting to see Bitcoin as a hedge against those longer-term risks.
Like inflation or currency devaluation.
Exactly. The same reasons people buy gold. If the global economy really sours because of ongoing trade wars and inflation, maybe Bitcoin starts to more consistently play that digital gold role. It's something to watch closely.
Okay, so we've got the market reaction, the historical context, the potential impacts. What are the experts saying? Any specific predictions floating around based on these tariffs?
Opinions are definitely varied. You've got known critics like Peter Schiff being quite bearish. He's basically saying this 2025 financial crisis, possibly made worse by tariffs, will be bad news for Bitcoin, unlike gold.
He's always been a gold bug, though.
He has. He even criticized the U.S. Strategic Bitcoin Reserve, pointing out its paper losses compared to how gold has performed.
Okay, so that's one bearish take from traditional finance. What about people inside the crypto industry?
Well, we saw an analysis from a COO at a big crypto exchange, and they were predicting a pretty significant potential drop for Bitcoin, maybe down to the $52,000 to $56,000 range by this summer.
Wow, that's quite a bit lower. What's their reasoning?
Primarily, continued trade tensions fueling volatility and skepticism about Bitcoin really being a safe haven right now. They also flagged a possible nearer-term dip, maybe to the 78K range by late April. So, pretty cautious outlook there.
What underpins that caution? Why do they see it going down?
They point to the ongoing high volatility as a key factor, plus the economic slowdown expected from the tariffs hitting risk assets generally.
Right.
And crucially, if investors lose faith in the safe haven narrative during this stress, we could see money pulled out of those big Bitcoin ETFs that become so important. ETF outflows could really add downward pressure.
But surely not everyone is predicting doom and gloom. Crypto is known for its optimism, too.
Oh, absolutely. There's definitely a counter-narrative. Some talk about a potential Trump-led crypto revival.
What does that mean?
The thinking is, if the administration were to introduce crypto-friendly policies, things like tax breaks for holding crypto, or clearer, maybe lighter regulations, that could be a major boost.
A policy-driven rally.
Exactly. Some analysts following that line of thought see Bitcoin potentially rebounding toward $100,000, maybe even $120,000 if those kinds of policies materialized.
That's a huge swing from the bearish predictions. Really highlights the uncertainty. Are people still talking about those much higher long-term targets, like 150K or more?
Yes, definitely. Even with the current short-term worries, many long-term bulls haven't changed their tune. They still point to things like adoption trends, Bitcoin's fixed supply, that scarcity argument, and the ongoing risk of fiat currency devaluation pushing prices much higher over time. Figures like $150,000 are still very much part of the conversation for the longer horizon.
Okay, let's shift slightly to market mood. We often hear about the crypto fear and greed index. What's that telling us right now amidst all this tariff talk?
So the Fear Greed Index tries to measure the overall emotional state of the crypto market. It looks at volatility, trading volume, social media buzz, Google searches, stuff like that. Puts it on a scale from 0, which is extreme fear, up to 100, extreme greed.
And what's a general idea? Low number means buy, high number means sell.
Kind of. A very low number suggests investors might be too worried, potentially creating a buying opportunity. A very high number suggests the market might be getting ahead of itself, maybe due for a pullback. It's a sentiment gauge.
So where is it sitting now? What's the mood?
Right now, it's hovering in fear. Today's reading is 29. Yesterday was a bit higher at 38, still fear. Last week, it actually dipped into extreme fear at 18, and last month it was around 22, also fear.
So consistently fearful lately.
Yeah, it paints a picture of pretty widespread caution and anxiety among crypto investors right now.
Is anything specific driving that fear reading? Any particular components of the index standing out?
Well, high volatility is always a big factor, and unexpected spikes definitely push the index towards fear. We aren't seeing the kind of high buying volume that would signal greed right now. But one interesting piece was the Google Trends data. There was apparently a massive spike, like over 1,500%, in searches for Bitcoin price manipulation recently.
Wow, that sounds like nervousness.
Exactly. That kind of search behavior often points to underlying anxiety, maybe a lack of trust or fear that the market isn't stable.
We've also seen some wild price swings in Bitcoin itself recently, even after that initial tariff-related drop. What's going on there?
Yeah, it's been choppy. After hitting those lows around $73,500, Bitcoin did bounce back pretty strongly, up towards $83,500 or so.
A big swing.
It is. Classic crypto volatility, sometimes called a dump pump pattern. Analysts are saying now that for this recovery to look solid, Bitcoin really needs to find its footing and stabilize somewhere in that 83K to 86K range.
Otherwise, it could just be another temporary bounce.
Exactly. Without consolidating in that higher range, it's hard to say if it's a real shift in momentum or just more volatility.
And how are the altcoins holding up amidst Bitcoin's swings? Are they just following along?
Pretty much, yeah. They're seeing significant volatility too. And there's definitely concern that many alts, especially the big ones like ETH, SOL, BNB, are in kind of critical situations. Their fate seems pretty tied to Bitcoin's direction right now.
They often magnify Bitcoin's moves, don't they?
They often do. Bigger gains on the way up, but potentially sharper losses on the way down. It's a higher beta play, generally.
Okay. Switching gears slightly, we saw some news about HTX-DAO doing a big token burn. What's the significance of that, especially with the market being so shaky?
Right. HTX-DAO, that's linked to the HTX exchange, they burned over $19 million worth of their HTX token in the first quarter of this year.
That sounds like a lot.
It is. And what's notable is that they did it despite the market volatility and lower trading volumes overall. It was only slightly less than their previous burn.
So they're sticking to their plan.
Seems like it. It shows they're committed to their deflationary strategy, taking tokens out of circulation permanently, regardless of the short-term market weather. The idea is usually to increase scarcity and potentially support the token's value long-term.
Interesting commitment. Lastly, it feels like the big traditional finance players are also sounding cautious notes. JP Morgan warned about economic turbulence, right? How does that fit in?
Yeah, JP Morgan's warning about turbulence tied to geopolitical tensions really highlights the bigger picture.
It's all connected.
It really is. Trade disputes like these tariffs often ramp up geopolitical tensions, and that creates uncertainty that hits all markets, crypto included. So their cautious stance just reinforces the idea that we could be in for continued volatility across the board as everyone tries to navigate this shifting global landscape.
Okay, so let's try and pull this all together. It seems clear these Liberation Day tariffs have thrown a big dose of uncertainty into everything traditional finance and crypto.
Definitely. We saw that immediate crypto price drop.
Yeah.
Short-term negativity seems widespread.
But the longer-term picture is, well, fuzzier. Lots of debate. Bitcoin's safe haven status is still being tested, maybe even debated more fiercely now.
Right. And its price seems really tied to these big macro factors: trade, inflation fears, overall investor mood. It's not operating in a vacuum.
So for our listeners, the takeaway seems to be, keep a close eye on those macro trends. Trade talks, inflation numbers, central bank moves, any regulatory shifts.
Absolutely crucial. All these pieces are interconnected and will shape how this plays out for crypto and everything else. Staying informed is key.
And maybe a final thought to leave everyone with. Thinking about history, how trade policy has shaped economies before, and then thinking about how new crypto is. How might these current tariff events change the relationship between traditional global finance and these decentralized digital assets down the road?
That's a big question. What factors will really decide Bitcoin's resilience? Will it find a stable role in a world that might be leaning more towards protectionism? Lots to ponder there.
Indeed. Definitely something to keep thinking about. Thanks for diving deep with us today.